This is Champion Trader Kevin Davey, and today I'm going to talk to you about algo backtests and why they can be garbage. Garbage! So let's get started. Now you may be wondering, what do I mean when I say algo backtests can be garbage? Don't you have to backtest? Well, there's two sides to that, and that's shown on this scale. On the left side, you have the US government saying past performance is not indicative of future results. And there's definitely a lot of truth to that. On the other side, you have people like me who say, hey, before your trading starts, you should be backtesting. Okay, now you could say, well, hey, those two things are saying different things, right? Well, they are to an extent. Who's right? Who's wrong? Well, I'll give you a sneak peek. Both can be right. And there's certain reasons why both of them can be right and both of them can be a little off. The key with backtests that you need to remember is you should use them as a general guide to the future, not an exact map. Just because a strategy made money every day, week, month for the last 20 years doesn't mean it's going to continue to make money. It could fall apart tomorrow. So the guide is nice because you know it's worked in the past and maybe it's a little more likely to work in the future. And I'm going to show you some data on that of some testing I did. The flip side is most people build backtests incorrectly, and then in that case you should never rely on it. If you don't build the backtest correctly, it is garbage. It is useless. And the US government disclaimer, past performance is not indicative of future results, is definitely true. And that's 100% true that most traders either do their backtest wrong, or they over optimize, or they use their results incorrectly or improperly, and they end up with garbage. And that's what you got to avoid with backtesting. If you can avoid those things, then you can put a little more faith in the backtest. And that's kind of what I'm going to get at today. So I wanted to find out the real truth. You know, is it worth backtesting? Yeah, I've been backtesting for years and it's worked well for me, but maybe I was just lucky. Who knows? So a little while back, a year or so ago, I ran 16 million backtests to find out the truth about profitability, future profitability, and that type of thing. Now, I share the full details of this study with my Platinum Strategy Factory workshop students. And in fairness to them, I'm not going to share everything with you today in this free video, but I'm going to share some of the summary results. And I think you'll find them eye-opening and pretty useful. Okay, let's go back. What did I backtest? Well, I looked at hundreds of strategies. I looked at good strategies, bad strategies, profitable ones, ones that were pretty much random strategies. I looked at candlesticks, indicators, patterns, all sorts of things, because I just wanted a wide cross-section of what people would create. And I looked at 40 different futures markets, so pretty much all the major futures markets, and I looked at multiple bar sizes. I looked at daily bars, 60-minute bars, 360-minute bars, all different kinds of bars. And I also ran this test over a 15-year test period. So this wasn't a 1-month back test that some people do. This was a pretty in-depth, long-term back test. And the key part about it is I made sure I wasn't over-optimizing, I wasn't curve fitting, I was not doing things incorrectly, in other words. So I used walk forward testing. I tried to use the best practices that I knew to at least do the test properly. Now, it doesn't guarantee that the results would be good or not, but at least they'd be believable in my opinion. That's the test I ran, and here's what I found. So finding number one, when you include slippage and commission, which you absolutely should, don't listen to anybody who says, oh, just ignore slippage and commission. You need it. And when you use it, only 35% of the tests I ran were net profitable. So only 35% made money. That meant 65% of the strategies lost money over a long period of time. That should be kind of interesting to you, because it means that pretty much any strategy you come up with, you're more than likely to lose money trading it when you include slippage and commission. Now, if you didn't have slippage and commission, that changes the whole game, and you can make money on almost any kind of strategy. But when you include costs, and those are real costs, by the way, then you get about 35% of strategies to make money. So that just kind of sets the baseline of things. Finding number two, I took a look at those 35% of profitable tests, and even with those, if you or I were to look at a lot of them, there's no way we trade them. The drawdowns are just too severe. I only looked at profit for that first number. I didn't look at what the drawdowns were, and the drawdowns are what really kills you, because they sap your strength during the equity curve, right? As you're trading the equity curve, as you're going along, drawdowns will wipe you out mentally and financially. So very few of these 35% would even be something you'd be wanting to trade. Here's some of the curves. These are some of the better ones. And you can see some of these have pretty significant drawdowns, pretty significant flat periods. And even though they made money over a long period of time, this is usually 15 years or so, or 10 to 15 years, they made money, but you may or may not want to trade them. So even that 35%, probably some people were getting excited and saying, hey, 35% of what I test will be profitable. No, that's not necessarily something you're going to want to trade. While it's true they're profitable, the drawdowns may get you. That's finding number two. Finding number three. The real key with all this backtesting is, what does it do after the backtest? And so I set it up to evaluate each of these 16 million backtests and to see what it did, what each strategy did after the backtest was complete. So in other words, it was kind of real-time live performance. And I did that for a period of a couple of years. What I found, if you have a profitable backtest, so you make some money in your 10 to 15 year backtest, you have a 43% chance of making money after the backtest. Okay? So, if you look at it the other way, you have a profitable backtest, you are still more than likely to lose. You have a 50% chance of losing money in live performance. Wow, that doesn't feel too good, right? But let's compare that to an unprofitable losing backtest. If you have a losing backtest, you only have a 29% chance of making money. So, backtest, profitable, you have a 43% chance of making money going forward. Non-profitable backtest, only a 29%. So that's pretty impressive that just by having a profitable backtest, you kind of up the odds of having profitable live trading performance that makes money. It's not a huge amount, but it's pretty significant. And actually, if you take the 43 divided by the 29, you get 48%. So profitable backtests are 48% more likely to lead to profitable live performance. But look at that statement at the end. It's far from certain, right? Remember, only 43% of those profitable backtests made money in real time. So you were still more than likely to lose money, even with a profitable backtest. Now, maybe your head's swimming here a little bit, and you might want to go back and listen to this again a couple times, because this is really important. It's telling you the backtest is important. It's important to have profitability during it, but that is no guarantee you're going to make money going forward. And that's why most backtests are garbage. Even when you backtest correctly, like I did, you're still more than likely to lose money with a winning backtest. So just think, if you do things incorrectly in your backtest, if you over-optimize, you curve fit, you do all that junky stuff. You have 20 variables and you run millions of iterations. That's real garbage. So your results are even going to be worse than that. So keep that in mind. Finding number 4. Okay, we said 43% chance that if you have a profitable backtest that you'll make money in live trading in the next couple of years. And this finding revolves around the question, is there a way to improve that number? And the answer, thankfully, is yes. And that's something I teach in my Platinum Strategy Factory, my award-winning course. I give you all the details about it. And you can actually bump those odds up from 43% up to 62%. So obviously in this video I can't give you details on what to do, but I can say it is possible to significantly improve your odds by doing certain things and doing certain analysis. And in simple terms, it means if you correctly do the backtest and you do a couple other tests and metrics that I teach you, you can now have a 62% chance that your strategy is going to make money in real time. It's all hypothetical, of course, but now you're doing a lot better than the 43% earlier. Finding number 5. And this is the downside to it. When you use the approach I created, yes, you get up to 62% that work in real time, but the problem is it eliminates almost all your strategies. It eliminates 95 to 99% of them. Meaning, if you test 100 strategies or one strategy, 100 bars, 100 markets, probably 95 to 99 of them are going to fail. They're not going to work. And that makes this tough. Makes sense though. Finding a good strategy is hard work. It is certainly a lot harder than people make it out to be. There's a lot of people out there who say, oh, algo trading, you can just create a strategy and start running it. You know, you need to do all these steps. You just code it and start running it. And it's not that simple, folks. It's hard work. If you want a strategy that looks like this, which is far from perfect, but it makes money, and it makes good money on a risk-adjusted basis, it's a lot of hard work. So to sum up, the US government says past performance is not indicative of future results. Absolutely true. Because even if you do backtest correctly, what my data shows is you're still more than likely to lose money with a strategy unless you do some other special stuff. And if you build a backtest incorrectly, that's almost certainly going to lead to bad performance. So you might have a great looking equity curve, doesn't mean it's going to make money in real time. And at the same time, when you do things correctly and you incorporate some special steps and special metrics and you do the right way of building strategies and evaluating strategies, you can significantly improve your odds of success. Not a certainty. I liken it to something like card counting in Vegas, where if you play blackjack and you don't do card counting, you're going to lose. But if you do card counting, as long as you don't get caught, you probably will make money if you do it correctly. It kind of skews the odds. And that's what my 16 million backtest kind of shows. Okay, so that wraps it up. Please, if you like this video, leave a comment. Let me know what you think. And if you didn't like the video, leave a comment. Tell me I'm full of it. Tell me why I'm doing things incorrectly. I'd love to know. I'm always looking to grow as a trader. And if I'm doing something wrong, I want to correct it, right? And give it a thumbs up. Hit the subscribe button. I'll keep making more videos. And then I'll try to help you with your trading. And guess what? When I create these videos, I also learn from people who comment and people who then contact me. So it works both ways. Thanks for watching. I'm Champion Trader Kevin Davey. Have a great trading day.